Hello, everybody. Welcome to Tuesday. Unfortunately, the S&P 500 was down about 0.7%, but again, it had company. The Dow was down about 0.8%. The NASDAQ up down about 0.9%. The Russell 2000, the small cap index, was down almost 2% today. So why is this happening? We've had now 2 days in a row where the markets kind of come down. And really, if you look at what's going on and you look at when the market kind of reacted to different pieces of news, I think it can trace it back to a few things, all of which has to do with the reopening. So number one, Europe has decided that they are recommending that they put a warning label for the blood clots on the Johnson & Johnson vaccine. So that was one piece there because, obviously the vaccine is super important. India has had a pretty big surge all of a sudden coming, and they're talking about the possibility of further lockdowns. And United Airlines came out with their earnings report. It wasn't what people were hoping for. They gave some good guidance in the future, kind of what they see coming, but the market sold off at 9% off on United Airlines. So, bottom line is just the situation where the virus has been around for a long time. The vaccine is on the way, and you've got kind of this COVID fatigue, and people are just out. Whether they're supposed to be locked down or not. In some places, they've allowed more freedom, and then combine that with this new variants that are out there, specifically the UK variant that seems to be much more contagious. And you have a case count on the virus that's going up. And of course, the market's looking at that and saying, hey, we're not going to be able to reopen as soon as we thought, those type of things. So definitely, this is not going to be a straight line. And this is sort of a different investing environment where you have to have pretty much extreme patience, because there's not money being made on any one side of the equation. You just have to be patient, keep investing in these reopening stocks. It's very simple for me. If you look forward 6 to 18 months from now, are things going to be better in this area of the reopening? I think so. I mean, it's possible that it's not. Obviously, anything can happen, but I believe that the virus count will be down quite a bit over the next 6 to 18 months because the vaccine is going to become more prevalent, and then I believe that the amount of revenue and the amount of spending that's going to come out is going to be higher than what's expected. I think this pent up demand combined with the actual money sitting on the sidelines is going to drive things. So again, I think you just keep accumulating. And I've said this before about these drops. Very important sometimes to rallies often start off of some of these drops. If you look at what happened back in October, we had a pretty big downturn. The S&P 500 came down almost 10% from that high point and right to the end of the month. And it got down to a point where, people were willing to buy. And we ended up with one of the biggest rallies I've seen, from the end of October really till the middle of February. And so, we're now backing up a bit. It's been very soft really since the middle of February. That's normal. We've had a huge run up. And so now when you get this little backup again, again, at 9% drop on United Airlines, somebody's going to come in and decide that's a good buy. Your cruise lines were down, all these things, so there's an opportunity to buy some of these different stocks that I think are going to benefit from this reopening. It's just not going to happen right away, which is exactly what you want. You want to be able to accumulate now at these low points. So I think, this, again, just a period of time, a little bit of a different investing technique here. It requires some patience. And so we'll, keep this rolling and see where this goes. So look forward to talking to you tomorrow. Thank you very much.